Hey, what's going on, guys? Welcome back to Way Up Trading. Now, today we're going to be going over some of the fantastic plays that we took today, some great opportunities that we took advantage of to the upside, including Carvana, GME, KRE, and SBUX. All of those bringing us anywhere between 30 to 150% return on investment. We're going to be going over the ins and outs of how we took those trades, how we found them, and also some other opportunities that I could see us having going forward into the next couple of days with CPI. We're going to do all of that and more right after this.
Show me the money.
All right, first we're going to start it up with KRE. KRE is a fantastic play that he did today. This is all alerted on Twitter. If you're not following me on Twitter, make sure you go ahead and start following me there right away. Post a lot of high quality plays there prior to, and this is one was no different. This one was a great play that we entered in. To start off, we were able to see that we actually were in this bullish setup here from the shark pattern, starting off on the 5-minute. This is also apparent on the 15-minute earlier on. We did want to take a note of that in advance, just so we have an idea what our levels are. This is harmonic trading, just to give you an idea what we look at in advance. If you'd like to know more about harmonic trading, hit me up in the comments section. We can discuss that later on in further videos. But however, we were starting off in the shark pattern, which is basically an M-style setup. Generally speaking, when you have this M-style setup, you can do this with or without the indicators in place. When you see this M-style setup, generally speaking, you normally will see a pushback upwards to match the high of that M. Now, this includes the after hours time frame, but it is a common setup where we see. You can look this one up. It's a harmonic pattern, but it usually plays out just like that, where you see a slight M, a downward push, and the push back up to match the previous high of that particular pattern. And that's exactly what we got today. In harmonics, it is mostly posted here. Also have my levels already placed in here with this pattern. This is typically, again, a bullish pattern for reversal. And I have my base here, which is just below the bottom at about $43.21. And then we had our terminal, which is at $43. And I knew we were going to most likely hit this type 2 or target 2 setup here at $44.28, which is exactly what we did, matching up this previous high in pre-market the day before. Now, this also lined up very well with our normal patterns for our normal momentum type trading setup. When those two types of setups actually match up, it's usually a golden opportunity to make money, because we know what we're looking for in the pattern. All we're looking for is confirmation on the crosses that we normally take when we play our momentum trades. We were able to see the several crosses took place yesterday afternoon in post market, and those basically continued on the 5-minute time frame. We had our 9:21 cross in the morning. We had our 13:48 cross in pre-market the previous day. And you can see that the strength just continued all the way up until it actually dropped down. Hit our support level here of terminal at $43.39. Shot back up. We have our crosses back to the upside, which is where I entered the play roughly around the $43.40 mark or so, which then it just skyrocketed upwards and basically started to play the upside move all the way up until about the top end, which is where I most likely trimmed the majority of my contracts, where it was hard rejected, or pretty much blown off top and pushed all the way back down. That, what I like to call the FU candle, came through, and this thing was shot back down to hell. So there was opportunity on 2 different sides. Just doing that pattern, I could have gotten in, but I was in several different places at the time, so I wasn't really involved in trying to play the downside. I just wanted to basically trim my position all the way out. Held runners up till I got to about 100%, and was ready to let the rest ride out if needed be, but still take profit. I'm not saying that you let that go to zero. Profit is profit, and that's exactly what we did. We took our profits on this rebound here and rejection, closed out the play, where it then continued to further drop down to about $42 at its lows. However, again, the same setup was here. We had our crosses as usual. We set up the play. We make sure, again, we take a look at our couple of other indicators that we like to use here. The MACD was also showing that we had the confirmation of the crosses up on the MACD. RSI also showed confirmation here. RSI showed it crossed above the signal line. That's our second confirmation. And our third confirmation here was a cross of the KST indicator, another one I like to use. Showed third confirmation setup. So those 3 was all I needed to know that this was going to push up. We had our crosses up here between 1348 and 921, all above the 200 moving average, and pretty much was lights out from there. 100% are easy, made our money, moved on to the next one. So again, momentum style trading mixed in with harmonic trading. watching volume, making sure that everything is above the signal line. It was an easy play. Caught that in advance. This was already planned out in pre-market and again posted on Twitter. So do follow me on Twitter for these types of plays. I do post these up, not for much longer, but for now, this is where you can catch them very easily. So go ahead and follow me on Twitter as soon as you possibly can. Now, Starbucks was a tougher one. This one was the next play we wound up taking. It took a little bit longer. Generally, Starbucks is a stock that I've known for a while. That I know it actually moves very, very slowly. Volume comes in very, very slowly. Never really runs really hard. A little bit more illiquid than most other stocks that we try to play due to volatility. So I expected it to be a longer term move. So on this particular play, I wound up taking an extended period of time, a 2-week out expiration date for 6/23, which was $99 calls. This one actually, I expected this one to move up. We had the crosses in pre-market. We had the crosses we were looking for, had my support lines already in place. We had the 921 yesterday, and then we had our 1348 go up today in pre-market. However, it immediately started to dump downwards, and I was already in my calls at this position expecting us to hold around that $98.05 mark, but it continued to waterfall all the way down, and I wound up DCAing or dollar cost averaging into my position, knowing that it was going to return to the mark that I at one point wanted. So I actually waited for the double bounce confirmation. Dollar cost average here. This setup was a double bottom, so almost like a double use type of setup. We played our support levels. I noticed that the volume was decreasing on the ways down and started to pick back up on the way up. We got our crosses off of this double bottom, usually a bullish reversal indicator. You can see it here. However, once we got that confirmation of double bottom, we saw the volume started to easily pick up above the signal line, and from there was able to go and start to close out this position. Later on, did really well on it. Didn't want to hold it. I know there's more upside to come. You can see it started to continue to push in after hours, but I did not want to hold anything going into CPI, which is scheduled for 8:30 morning Eastern Standard Time. So wanted to make sure I got out of that and just avoid any kind of unnecessary risk on that as well. So overall, this was a little bit more difficult of a play. This one took a little bit more expectation, but we did protect ourselves to the upside. Was able to trim contracts all the way up. Also was able to protect ourselves on the downside, knowing that we had our double bottom set up here, and we're watching for a reversal pattern, knowing that the top end of this thing we already had in place was $98.35, with a potential to push up to $99 to $100 based upon the 15-minute trend. So you can see the 15-minute trend is actually a little bit easier to see. We crossed above the signal lines. We knew we had the 921 cross here on the 15. It was just a further continuation that played it out, so it was a good thing to see. Once we broke above the 21 moving average here, that just let us know that we're now back in bullish territory and things are going to continue on, and that's exactly what we got. So we're able to get out of this thing, luckily. But again, we had time on our side. We played one more week out additional to buy us more time because, again, we knew the characteristics of the stock. Being more liquid takes a long time for it to make its moves. So it set us up for a successful trade just because of the fact that we had an idea of how this thing moved in advance. So if you're getting started on this thing, you do want to start to try to memorize or understand some of the characteristics of how these stocks can move, simply because you don't want to get trapped into a situation where you're stuck in an illiquid stock and you take a loss because of the setup might be there, the setup might be showing itself, but you don't get any volume and you lose money. So stay away from those types of stocks if you can. These types take a little bit more patience, but you can still play them successfully as long as you are comfortable with dollar cost averaging and understanding what the risks are involved with that as well. So this one was more of a teachable moment, and I just wanted to make sure I was able to at least point that out. Overall, good play, made some money on it. Move on to the next. All right, and here is Carvana, which is the next play we wound up taking. Now this one was also another one that actually wound up going really well. We were able to play this. I actually picked up calls on this one for a longer strike dated on 6/23, which were $30 calls on the bounce play that we had. After it sold off really hard the other day, this past Friday, I actually entered my call somewhere around the $19 or $20 mark and was looking to play the $30 rebound on this thing, because I do believe that we're now in a reaccumulation phase on this particular stock, which basically means there's a sell-off, and shorts are basically trying to get prices lower so they can get ready for the push back up. Now, I was able to clearly see that after this move upwards, that 60% move, we fell into this, again, M style setup, which is basically a shark pattern. We call this in harmonics, which basically means there's a little bit lower of a low than the previous, and you start to make your way back up where you'll eventually, at very least, touch the top end of this particular side of the M setup that we have here. So you get this M style, comes down, and eventually it will come back here. Some of the key resistance levels that I had were about $22 for today, which is where I entered my calls this morning for $20 calls. I did take weeklies and also DCA'd on 6/23 expiration date calls. Those wind up going in very nicely, but I did get shaken out on the way down because there is always a possibility that there was a huge gap that was left. And I know a lot of people are still looking to possibly play the downside. But like I mentioned in my last video, you can go and check that one out as well, is that right now we are at a very, very crucial time. Be careful trying to play the downside on some of these stocks, or you will get bowled over. And this is exactly one of those situations. We did go ahead and get faked out later on in the day when they dropped this thing from about $21 all the way back down to about 18 bucks. So it did wind up recovering all the way back up to have a closing roughly around $21, but almost roughly tapped the $22 mark. Just was exactly where I expected it to hit. I'll show you my indicators here. Here's the shark pattern we talked about. We also basically in aftermarket basically got the W setup, which is also considered to be a bat pattern over the smooth moving average, which is this gray line. This morning we had broken through. I entered my calls roughly at about the $18 mark because I saw we had our momentum indicators in place. So we'll zoom in a little bit. Our 1348 crosses as well as our 921 crosses over the 200 moving average all worked out in unison, had our supports and resistances. I knew this was going to go from here. You was clearly able to be seen. It dumped immediately at open, basically got its tweezer bottom, which is basically two candles that engulf each other, and from there it was game on. We played the upside and just rode it all the way up to about this level, about $21, which is where we're making a good bulk of the money. And I wound up getting shaken out on this downside move after we broke the smooth moving average, which was perfectly fine. Again, we like to trim on the way up, so we don't make sure that we're pocketing as much profit on the way, rather than catching one of those FU candles, like to call them, where we lose most of our gains. So basically, you want to make sure you pocket the gains as they come in, and so you're not scrambling at the end and lose your money on the way down, because anything that can happen will happen. So always do remember to trim your positions, take your cash as you can, and there's always going to be another opportunity to make money in the stock market. You don't need all your gains off of one move or one play. So once again, we got our 1348 crosses. I'm using also the ultimate moving average, which is this green and red snake you can see here. Once we flip through, we got our bullish momentums. It flips green, showing that we're in a clear uptrend. Once it breaks, again, if this was above the smooth moving average, which is this green thicker line here, broke down, it flipped red. That's where I got shaken out, but it just reversed and then started to proceed to do the thing. Do it. And start to bounce all the way up to about 22 bucks before selling off at the close. And it's still holding its gains in after hours right now, sitting roughly at about 21.25. And I am expecting to see the next level hit and break going forward within the next couple of days. If CPI is bullish, like I keep mentioning, and I'm going to continue to mention, because that's really going to set the tone for the entire rest of the week, not just on this stock, but on several other stocks throughout the market. And I see this thing continuing to push. I am looking to continue to get back in. I am exited out of all my calls, even the ones I was intending to swing. But we'll always get back. We can always get back in. And right now, I'm looking for us to potentially start to push that $30 mark within the next week on Carvana after this reaccumulation setup, as I mentioned, on this particular M-shaped pattern. We are going, which topped out last time at about 27 bucks. I'm expecting a move somewhere there, or potentially to about $30 to $31 within the next few days to about a week on this stock, as long as the rest of the market can hold up. So right now, so far so good. Wound up actually doing really good numbers on that one, as well as on the weekly, as well as the bi-weekly setup here. And yeah, good days, good money. Move on to the next. GME is a very similar setup, as we mentioned with Carvana. A very risky squeeze play. We got to be very careful with squeezes. I try not to mention these too much. I do want to see everybody win. It does take a very, very specific type of risk tolerance in order to deal with these squeeze plays, because you can make a lot of money, but you can also lose a lot of money, because they are very, very manipulated due to this fact that shorts are usually in control of time and space, and they can usually use whatever tactics that they can to survive. And these cases are usually no different. If they can find a way to stretch these things out, or kill volume, or use it whatever dirty tactics they can to survive, they're going to use them. So these are the types of stock that usually happen on. However, we can still find ways to make money if we understand what we're looking at on the charts, and the GME is basically no different. We had that huge sell-off the other day after the earnings miss, ran all the way up to about 27 bucks before coming all the way back down, and just about reaccumulated all our gains, or picked up all our gains back above the $24 mark in a very short period of time. The last 3 days have been huge. We are still in that OPEX period, so I'm expecting a lot of volatility to still be happening with these heavily shorted stocks. So nothing has really changed on that front. So you can see that, the last couple of days we started to pull up, and it's been nothing but upside ever since the fall down to about 20 bucks. I entered in my calls the other day right after the dump, and since that time we were back up about 21% on those calls on the entire stock, which has been huge on the options front. Now I picked up further out strikes, which were basically for August 18th 2023, well out of the money and well out in time frame to give us enough time to actually hit. They were actually quite cheap, which is a good move. Could have played a lot closer, could have made a lot more money. However, safety first in this situation. If it does hit earlier, fantastic. But I was basically scalping that out just in case. You can always re-enter with some of the gains we make. However, did very well on some of those. Was actually pulling out about 40% gains on that today. All based again on the idea for momentum, as well as the channel that I noticed that we've been in. GME is more linear, so it's easier to see the setup on GME. Able to cross over some key resistance areas, as well as what we saw on the momentum side of things. We had our crosses on several time frames. It was just, again, I think shorts wanted to reaccumulate it. They needed an excuse to dump the hell out of it, and they did. But it was a perfect dip buy opportunity, and we rode this thing all the way up. And pretty much that's that. You could have gotten in earlier today, yesterday, any time frame, and you would have been fine because the laws still applied for momentum. You didn't need much else besides just seeing your crosses. If you would have gotten in today, you would have seen pre-market right here, 921 cross above the 200 moving average. You got the yellow this morning, and that was your indication above the 200 moving average. Indication to just go. I mean, it was on a rocket. It ran about 7%, 8% today. Finished at $24 after starting the day at 22 bucks. So it was a huge move either way. You could have gotten this thing yesterday, the day of, and you would have made a lot of money on this play. I didn't buy anything for weeklies today, but again, I was entered into those longer dateds and roughly pull out 40% profit on those. Yeah, but the laws still apply. Nothing really changed as far as momentum was concerned. Had the supports and resistances. You see I had my top support sitting here at $24.22. Hit that and basically just kind of bobbed around it for quite a period of time, almost triple topping, but it did not subside and come back down. So there is still a lot of strength left in GME. I don't think the move is over yet. If we start to see some again bullishness coming out of the CPI, my next target's 25.01 and 25.25, basically regaining everything that's lost after the dump on the earnings report. But I see that GME has been one of those cases that they have not been able to push this thing down at all, as far down as they would like to. And it's a company that I still don't understand what they do to make money, but they seem to be in a position where they really have shorts backed up against the wall, and the price continues to go up no matter what, whether or not they are not making any money, whether or not we don't know what they do for a living. It's just that they're just so short and they can't find shares to cover this thing. So it's a squeeze play regardless, and that's why it's moving. So we're going to keep an eye on GME. We're going to keep an eye on these different plays. I do still think there's upside coming, but we do need to pay attention to what's going on with macroeconomics and see that the market's bullish until it's not. Keep an eye on what's happening with CPI, FOMC, PPI information coming up on Tuesday and Wednesday, and we're gonna play the charts as they give it to us. SPY is looking really bullish as long as it can hold. I believe that we can see 443 if those pieces of information are positive, or if there's any type of indication that we're gonna have a pause, that thing could go vertical. So keep an eye on things. I'm gonna be watching this over. If you do like this type of content, please go ahead and comment, like, subscribe, follow us on the way up. We're gonna be here each and every day, growing up our portfolios together, making the outcome income for 2023. Like, comment, subscribe, follow me on Twitter, and I'll see you soon. Take it easy.